Hello traders, hello everyone, it's April 7th and welcome to our new webinar on this so-called Black Monday. Hope you're still doing well out there, that you are managing your risk successfully. Hope you're not exposed too much on the long side of the stock markets here. So looks like that we are fine. Can you see the screen? Let me check here on YouTube. Okay. So, as you know, the markets have seen a very strong sell-off after Trump has announced tariffs last week, and even China has responded. They also imposed their tariffs for the US, but Chinese shares also have seen more than 10% drop. The most important is that Trump said that they will stick to the current tariffs plan, and of course he believes that this will make their economy better. But obviously what we can see, what he wants is lower interest rates. He's expressed plenty of times in the last few days that Powell should cut the rates now because we have energy down, inflation is coming to the downside based on lower energy and commodities, and of course lower interest rates would help to support the economy and stabilize the stock market. But the most important is that Powell said that they are not in a rush with cutting interest rates last week. So the question is how long the stock market will be in this very strong drop. We have to consider that obviously stocks are moving to the downside based on the fact that this could really send us into a recession globally. Okay, but when the recession would really be confirmed, when you have, let's say, a few GDP reports for 2025, okay, maybe for first quarter and second quarter, and if we get better results, that's actually when they will aggressively start cutting rates, and that's when also stock market could stabilize. Now we will get the first report for this year GDP. I think it's at the end of April, and then for the second quarter will be in July, if I checked the dates earlier. So excuse me if I'm wrong here, but I think that of course this would be the very important trigger for Powell to really start cutting rates. Okay, it should be the bad data. So until then, stocks could really stay in this consolidation, and we will have to focus on the levels and the price action that we have out there. Now, looking firstly at total put call ratio. Okay, so that's actually, it's a combination of both ratios, put call ratios from equities, okay, and from indexes. So that's the most important total put call ratio that I'm tracking, and you can see here that we are still not at the levels compared to that was back in ahead of US presidential elections in November. Then we got this massive sell-off in August, and then also a few readings were quite extremes here as well a year back or so. And basically we are not there yet, but looks like that because we gapped lower now on the opening. Of course, I believe that this week we will get this data even higher to more extreme levels. So it means that there will be a lot of fear involved, a lot of puts going to be bought, and normally whenever this occurs, we could maybe start moving into this some very extended lower levels that could potentially cause some recovery. Now, if you look at the 4-hour time frame, what we have here, well, we still have only 3 legs down from the highs, right? But what is the most important is that even if that would be some kind of an extended wave C rather than wave 3, keep in mind that wave 3 is also very probable because we broken this channel support, but that's very common as well on stocks, because stocks in downtrend are very strong, very very sharp move. So it's not the very similar, it's not exactly the same price personality compared to the FX, for example, where maybe weakness, it's much more easier to be identified by the real personality there, where you have wave C going to be very slow. But on the stocks, wave C can be very strong. So still, even this, if this is some kind of an extended wave C or wave 3, whatever, because that's not really important at this stage, is that we need 5 sub waves down from that high, from 5,800 that we've been tracking as a resistance. So looks like that there is still some room left for more weakness. Also keep in mind that these August lows here can be basically now a very important new resistance after this recovery. In fact, if you look closely, you have some gap here in this gap from weekend that could actually become a very nice resistance as well around that August swing low. So potentially we will have another drop lower, but then we will see if we'll get any kind of an emergency meetings, whatever, that will try to stabilize these markets. We know that usually we will get some kind of a rebound after this massive sell-off, especially if the strong sell-off occurs in a very short period of time. Okay, now looking at the big picture, keep in mind that here on the monthly scale, okay, I'm just wondering if maybe we are really already trading in this very big wave 4. Of course, that would be the case if we will have a confirmed 5 waves down from the highs, and as I said, for now we still have only three legs down, but even more weakness is needed within these 3 waves of recovery. But if at any given point we will have 5 waves down, we will step in the massive correction here that I was expecting this year to unfold, but really wasn't that sure that this will already start actually on the same day when Trump took office. Okay, so looks like that we are definitely in some very deep corrections here. Now when it comes to trading decisions, any kind of an intraday setups, especially on the long side, of course, are not recommended. It's better than to stay aside until dust really settles and you see some kind of a signs of life here. Now when it comes to your portfolios, maybe some are already actually adding to their portfolios, because after all you have some very nice pullback here of around 15%. Maybe we'll get a 20% or so, but still, of course, there is a room for this wave 4 to unfold for another 20% from current levels. So that's something that you have to consider. But if you're longer term investors, of course, even if you'll get your better lower levels, I'm sure that you will successfully try to define your potential risk and entries here, obviously. Now looking at also at the 10-year US notes, firstly, which are here. So what's the most important here? You have 5 waves up from that lows, okay, from the previous lows. That's basically we are looking at adjusted contract, futures contract, because with that way we avoid some of the unuseful gaps that occur between expirations. But now what's the most important here, that we have 5 waves up from that lows. So obviously this is all driven based on the fact that maybe the Fed will start cutting rates again this year, maybe much sooner than firstly anticipated, and that's why we have seen this massive push to the upside here. But we could see some pause and then another push higher should be seen, meaning that the US yields will continue to the downside, and this could be maybe still the main driver for this US dollar weakness, which is below that US yield chart. So that on the bottom you have dollar index here, and you can clearly see that that was the top on the same days. And since we have seen some very nice bearish impulse here, obviously I'm thinking that dollar will also continue to the downside, and still we have to break towards 99.50 before we can even, or 30 level, before we can even start considering potential stabilization, more important one here for the US dollar. because if you look here on the 4-hour time frame, notice that that's a very nice, beautiful bearish impulse. As you know, we have been looking for a break below 103 level, and we have seen a pretty nice move into this FIB extended targets. And now what we are experiencing is some nice rebound, and I'm sure that this rebound is because we have seen a very strong sell-off on the US stock market, right? So because the US stock market has made a very extended move to the downside, at some point you will still see US dollar acting like a safe haven, which is not acting in the similar way like we have seen this in the past, but it's preventing dollar to collapse even further when you have stocks moving to the downside. But maybe the reason why this time is different is because no one really knows who will win in this situation of trade wars. Maybe the Europe, after all, will make much better decisions, maybe with some other countries, and you will see that euro will doing much better than the US dollar, despite stock market trading to the downside. But now, when it comes to the Elliott wave principle here on the dollar index, we definitely have a very nice, beautiful 5 waves down. So what I would expect is that now when stocks are keep pushing to the downside and maybe trying to look for some support in the mid of this week, what I would expect is the dollar will then maybe find resistance here in a wave 4, which I think it's already underway. Very nice level to watch is always the 38.2% of an extended wave 3. Okay, this comes in around to 104 level. And then what I usually will do is I will take the distance of this wave 2 and I will compare it from the end of wave 3, and you can see that I get very similar zone here. But before that, we have also this swing low and this swing low as well, which could definitely should be respected, but only maybe in the first subwave A of this wave 4, that in my opinion could be maybe more complex if we consider the rule of alternation, because wave 2 was quite sharp here and deep. So definitely something that we have to consider here in this wave 4 as well, maybe a bit more complex. But after this bounce, after some very nice healthy corrective recovery, I just think that there will be more weakness and possibly even some interesting opportunities on the long side of the euro dollar. We have been long euro dollar. I even shared some of the entries on Twitter. I'm not sure if I also did it here on YouTube as well, but we have seen a pretty nice recovery here, and now, as I said, maybe it's time for a new pause. We even gapped lower here, so I think that this will not be low of the week. Always when you see some kind of a gaps, especially a price, if the price moves away from that open, I still think that this price eventually will be retested. So that's why I also think that there can be a bit of more weakness here and room for this correction to unfold towards 107.60. maybe 108 is the first support to watch, but then that's the area where I would be looking for new potential opportunities. So what's really important here is that we still haven't seen a retest of this that was 2024. So that was the 2023 high here, and here you have the 2024. Okay, so I still think that we will see a move into that area, and ideally there will be opportunity to look towards these targets once we have this pullback completed here. Okay, definitely this one is and will be on my watch list. Now, why I think also that here euro will stay in this recovery mode? Well, here we are looking at the COT data. Large speculators are long, but definitely not anywhere close to the previous extremes here. Okay, so if you compare data from 2018, 2020, 2023, you can see that each 2 years or so we have seen then a top, but now it's just the beginning of this recovery. So I still think that there's a plenty of room for more upside here on the euro. So that's why I think that large speculators will continue to be looking to buy this currency, and that's why I think that euro dollar has room for further upside here as well. Now looking at cable, well, we have seen a pretty strong sell-off. As you know, last week I said that we are in a wave 4. I'm expecting a push to the upside, and this was a classic example how the market usually reacts once you have a triangle. So triangle will keep price sideways for a bit longer than some would anticipate, but then when suddenly market breaks out of the range, everyone tried to ride this wave, but unfortunately they are too late. They are trying to join the trend in very late stages of these 5 waves. So moves out of a triangle are final in a sequence, and that's basically a 5th wave. So I'm not surprised that we have seen this reversal. Yes, it's quite aggressive and very strong one, and unfortunately it's still only first leg of a minimum 3 wave drop. So even if I think that's a wave 4, and I firstly had this very nice support around 38.2% at 1.2840, well, because that's only one leg from the highs, I will not fight this price action and say that that's all from the wave 4, because wave 4 should be made by 3 waves. So I certainly will wait and have to respect and be aware of more weakness, especially after any kind of a wave B rally. I also can consider the scenario that, who knows, what if this is already the higher degree wave 2 and I adjust the wave count a little bit. That's also, maybe that would be some kind of a running flat here for wave 2. That's also very possible. In such case, of course, much more appropriate support for a wave 2 would be much lower, and invalidation level would be at 2025 lows. Okay, so you can see that in both cases I just think that this correction certainly is not finished and could have a lot of room to correct further. Now Aussie, as you know, has seen a very strong drop. I didn't have very good feeling for this one. I was really struggling with the wave counts and interpretations recently on these commodity currencies, because they were just all over the place and did not really have a clear directional move. But now, after I have seen a break below these swing supports on Friday, it was very clear to me where we are headed. And what's really important right now is that we came out of this triangle. Okay, so as I said, moves after a triangle are final in a sequence. So I think that we have to respect that there could be some very nice support. You have 590 level at the 161.8% extension of this wave 4, and also you have down here this 78.6% of this, what that's basically goes back from 2021. So looks like that we cleared plenty of stops around this below this swing lows. So, and because we have this triangle, I just think that it could be quite interesting if we see maybe in the next few days some stabilization on the stock market, in Chinese shares in particular, and then maybe we see some interesting bounce on this one. But do not call, I don't want to call or confirm any kind of a bottom here unless I see very clear visible 5 waves up impulsive reversal from the lows. It can occur from current levels, or who knows, maybe even we'll have to wait till 580 and then we see kind of a bounce. So that's why it's very important that even if I have this wave count that could send us the other way, I still want to see that market confirms the fact that we are really bottoming. It's not me that I will decide where the market goes. Okay, still it's market itself must to confirm that we are already making a reversal, but for now it's definitely not the case yet. So when it comes to potential trade setups, I would avoid this this pair here, but would be on an alert for potential longs whenever I have some very strong confident low in place here, which unfortunately that's not the case right now. Looking at dollar CAD, this one recently came out of a triangle and it almost touched 1.4 level. And last week I said to our members that whenever we see an overlap with 1.423.2 level, it could be quite interesting for potential bottom, okay, at least temporary one. Why? Because if someone would think that that was a bearish impulse and that firstly that this was some kind of a sell-off that that belongs to impulsive bearish interpretation, well, this is now invalidated. Okay, so that's why, because even aggressive bearish impulsive interpretations have been invalidated, it's even more important indication that maybe we are really bottoming down here. So after some next setback in the near term, I just think that we could retest this trend line and then ideally even start breaking above it. So for this week, I would not be surprised if we start moving after a pullback towards this level here, or from April 1st. I'm not really sure that we will continue maybe straight to a new on some smaller short-term projected levels, and whenever they're reached, then I will go from there. Okay, so I think there was some error with my internet connection, anyway, I think that we are back now. So that's for dollar CAD. Now let's take a look for dollar yen. Just a second. Okay guys, are we back now? I think that we had some issues here. Okay, so where did I finish? A dollar CAD? Oh my god. Yes, okay, good to go. Okay, perfectly. So dollar CAD, as I said, I think that we could be bottoming and more upside could be seen at least short term after setback. Okay, now dollar yen. As you know, we've been looking for weakness on dollar yen, and we have seen some very strong serious sell-off. I've been looking for 145, 144 level, and as you know, it's all driven because of the lower US yields. Here I have also dollar yen with the US yields that we've been analyzing recently with our members. And now the question is, what's next for dollar yen? Well, I think that the US yields could be moving into some support. As I said earlier, treasuries have 5 waves up, so that could make sense. And the next important thing is that look at this COT data. Okay, we have here also large speculators. Okay, they are heavily long. Okay, I'm not sure when it was the last time we have been at these extreme levels. So it means that Japanese yen could maybe be moving into some serious resistance, and in such case it means the dollar yen is maybe not far away from the support. That's one thing. The next thing is that this drop still looks like it can be counted in 7 swings. Okay, and then if you take a look on the daily chart here, well, we are at the 78.6% of this recent recovery here from 2024 September lows to January highs. So definitely I would not be surprised if we stabilize a bit. I'm not saying that we will turn bullish in any way. I definitely I'm aware that there could be much more downside here, but based on the COT data, based on short-term wave structure, based on the US yields, based on, after all, this corrective bounce on a 4th wave on dollar index, I just think that we have to consider that maybe the important support is not that far away. Okay, and that we could maybe see another retest of 144 level to really complete all of the needed subwaves here for a wave C, but then be aware of maybe some stabilization here. Now since I mentioned dollar yen, last week we said about yen crosses, I said that look, we have bearish patterns on yen crosses, we have bearish dollar yen, you just have to be aware of bearish yen crosses or breakdowns, because stocks were also seeing in a very serious risk off. And we can see that Kiwi versus Japanese yen is breaking this trendline support, but now it's testing the horizontal support here around 80.40. We already can see some rebound, but if you look closely on a smaller time frame, you will see that basically those yen crosses are now just trying to fill the gap. So if the S&P 500 and stocks will maybe after or during the US session will be sold further after this gap is going to be filled on futures, this will cause a serious new leg down also on those yen crosses. So if you're looking for some risk off setups in this current environment, at least if you are more like intraday traders, maybe now should maybe keep an eye on these current resistance levels on those yen crosses. Like here, for example, on Kiwi, let's take a look here. You have this gap. Whoa, basically this one already got filled around 82.23. So this could be the first interesting resistance for next potential sell-off. Okay, we're to continue. Let me check my charts and notes here. Crude oil. Well, you know what we've been saying for crude oil since end of last year, mid of last year. We've been tracking a triangle. Now finally this triangle is being broken to the downside. It's a very aggressive move, so we are stepping into this wave C. Okay, now how far wave C can go? Well, I have this 38.2% projection of wave A measured from end of a triangle here. That would be the first objective, and the second objective would be if you take the distance of this wave A within a triangle and then project it from this end of a wave E, and you will get with the levels around 42. So if I should focus on some levels, the very big level is definitely the $50 per barrel. So if we see some recovery in the near future, I'm just afraid that this will be just a temporary bounce, and the very strong and serious resistance should be then around maybe around $64 per barrel. But of course the important is what kind of a structure we will see in this next potential bounce. If that will be very sharp move to the upside like an impulse, then of course we will have to maybe adjust the wave count. But if there will be just a slow movement, something like this, okay, and you will see some overlaps, then of course you will see this as some kind of a correction within downtrend. Overall, that's a bear market, and we just have to respect and be aware of more weakness unless we see impulsive recovery. Okay, by the way guys, if I didn't remind you yet, please make sure to subscribe to our channel, press a like, so that we will be listed higher on YouTube by algorithms. Okay, for more analysis, of course, visit us at wavetraders.com. Now let's take a look on gold. So what's happening on gold? As I said a few times, well, despite some very strong inflows on gold, a lot of, because everyone sees it as a safe haven, keep in mind that when you have some serious strong sell-off on stocks, no matter what kind of assets is it, it's in our blood that we feel safe if we have cash in hands. So even in very some bad times, even gold will sold off. And we have seen these examples in the past that whenever there is a real recession, very strong sell-off, even metals, gold will sell off. But of course, once we have then some emergency meetings, rate cuts, and some new optimism, then safe havens are, then cash will very quickly be put back into the safe haven. That's why gold will be one of the first that will try to stabilize and continue back to the upside. But now, when it comes to an Elliott wave principle, what I've been discussing before is that we have 5 waves up from that 2500, plus we had 5 subwaves on a smaller degree scale, because we know that Elliott waves is fractal. And I'm not surprised that we are seeing this reversal happening right now. We even moved for a few bucks below 3000 level, and I'm just afraid that maybe we are stepping into this higher degree fourth wave. I'm not saying that this wave 4 will be necessarily deep. It could be sideways, you can see some flat correction, but the important is that maybe there is time for this market to slow down a bit, to take a new pause, new breather, because that's definitely totally normal rhythm for the market when you have such a strong move. You can see that there were always pullbacks in the middle of this recovery. So of course we have to respect that maybe something similar at some point will again show up, and maybe we are already seeing the first signs of this movement happening. What would most likely to make me even more confident for this corrective cycle is if we, in the next few days, few sessions, make a new swing low here. That would be even more important evidence that we are headed for a deeper correction here. Now here we also have large speculators for gold as well, and you can see that we are not at that extremes yet if you look data back from 2020. So that's why maybe there will be still some kind of a bars that will show up, but eventually much more attractive, at least for me, would be to join the recovery, especially from an investment perspective, to look for some new opportunities once you will have some deeper correction here. Also, what's very interesting right now is to look at gold silver ratio. This one has been exploding to the upside recently, okay, and we know what the gold silver ratio usually tell us, okay. Now when gold silver ratio moves to the upside, it's not the best perfect time to be on metals in general, okay. Yes, this time it was different. It was the best place to be on gold, but not on silver. But if you want to see that both gold and silver could do well in when metals are in uptrends, you want to see gold silver ratio moving to the downside, okay. And so far we have seen a very nice push to the upside in this gold silver ratio. So I still think that this year this ratio will complete this current structure, current uptrend from away from exactly from a year back in 2024. So once we have these 5 waves up in place, I think that that will be very important indication that we could be moving into some serious resistance, and a reversal to the downside would make me much more confident that metals are really back in uptrend, and that's when we could be looking for some opportunities. Because we also can see that obviously silver has been lagging quite a lot compared to gold, and I'm just wondering if maybe we are really moving closer to this potential reversal price here on gold silver ratio. If maybe silver in the next phase of a bull run on metals would be much more better, much more attractive opportunity on the long side. It certainly would not surprise me, because if you look here on the wave structure itself, well, keep in mind that we are falling quite aggressively here, but what if that's a wave C of this counter trend movement? I'm not saying that wave C will bottom here. I'm just trying to point out in which stage or phase of this current drop we could be at the moment. However, I would be watching levels maybe around 28. What will happen down there? We had some swing support here, so if we retest these levels, I really want to see stabilization and a reversal back to the upside, because if we just will fall through this level and then even suddenly invalidate this 26.18, then I'm afraid that silver will stay trapped here in this triangle, which by the way is my primary wave count, and that opportunities will then, much better opportunities will then occur from around 22, 23 levels, okay. So metals for now on a pause, but on the next bull run I would be paying attention to silver. Now finally, let's take a look on Bitcoin. As you know, Bitcoin cryptocurrencies have seen a massive sell-off yesterday. It's actually not a surprise, because it was just a matter of time when cryptos will also see this pullback to the downside for lower prices, and we have seen some serious sell-off right now. So it looks like that cryptos are now trying to to catch the downside with stocks, and still if the stocks would stabilize at any given point, that could be positive for cryptos too. But looking at Bitcoin here, basically we are possibly coming out from this fourth wave triangle. So you're now at a very important support, horizontal support here around 74,000. So that's the first level to watch. But the second level to watch, well, that goes back to November 04th. Okay, Trump won the US elections back then. Okay, so you can still see that that's quite a big gap to this area. So if I would have to guess where market would bottom, definitely I would pay attention more to this level rather than the current one. Okay, because I also see stocks maybe still incomplete in this downtrend. We finally have some bearish momentum here, and that's why I'm thinking that maybe this could be much more important level. But still, what's the most important is that that's not a 5-wave drop from the highs. It can be a wave C, but unfortunately this correction just can last, and I'm not seeing it completed yet. But it's a good thing to know that if that was a triangle that moved out of a triangle, are finally in a sequence. Okay, so if we get some serious drop into that level, I think that we could get some very nice rebound. Also, keep an eye on this one. It's Google Trends. Okay, so it basically shows real sentiment, how people retail is thinking, doing, how about specific instruments. So here we are looking at Bitcoin term, and as you know, it was very popular here back in November when we just started moving towards 100,000. Everyone got so excited about the Bitcoin. We were seeing targets for 200,000, for million, whatever, and basically the sentiment was at extremes. We have seen the opposite, and now if we will see another drop, let's say towards this 65,000, as I said earlier, as I showed you on that chart, I think that could be really put Bitcoin into some stage of extreme fear. You will have a lot of liquidations happening, and you exactly know what this will mean for the overall trend, that most likely we will move into very late stages. Now let's take a look also on the Ethereum. Ethereum is also turning down from the upper side of the range. We are currently moving into this support around 1,400 to 1,500 that I have been talking about last week. So maybe we get some stabilization here, but possibly maybe just short term before we try to reach even lower prices, because obviously we can either be in incomplete wave C of a triangle, or maybe we are even in wave C of a flat, meaning that even 800, 900 level could be retested and still would be fine for this correction to be part of a higher degree bull run. Okay, so the Ethereum, it doesn't look really good at the moment, but if you see some kind of rebound, I think that the first resistance maybe to watch here in this downtrend would be around 2,000 and 2,100. Now, final market for today will be Ripple. Ripple, as you know, we have been saying last time that it's a correction, it's a complex one, maybe a triangle here in a wave 4, maybe a deeper wave 4, and now what we have seen is a retest of this 1.6 level, but keep in mind that that's a log scale. Okay, don't get confused by the overall price movement. It was still a very strong deep pullback, more than 50% from the highs, from all-time highs. Okay, but still, whenever you have such deep pullback on cryptocurrencies, especially if you start seeing some altcoins moving closer to 70 or 80% of a pullback, that really would tell us that we are in the late stages of the cycle. In Elliott wave terms, because we have this overlapping price action, I just think that we could be still having a correction here, but it would be very welcomed for us to see a rebound back above $2. That would increase the confidence that this correction, that this is really a correction and most likely completed. Okay, traders, I can see some requests on chats, but unfortunately I'm running out of time. I hope that you enjoyed this presentation. Make sure to press a like once again. Leave me a comment below this video if you will be watching this one a bit later. If you are interested in more of analysis, make sure to visit us at wavetraders.com. We are covering all of these instruments and even more in our members area. So if you are interested to see how we do and also track some intraday wave counts that were not been shared here in this webinar, then I welcome you to check our website. Traders, good luck this week and talk to you soon with new updates. Bye.